$70 a barrel. Welcome, Omar Najia, Global Head of Derivatives at BB Energy. Omar, would you consider that, or would OPEC Plus, I suppose, would be the question, consider that a week after announcing to the world that they were going to start raising supply, that Brent holding at 70 would be welcome, would be a victory, would be happy enough? Your thoughts?
Yeah, I mean, OPEC Plus want allegedly higher oil prices, but I don't think, there's been a decrease in supply from places like Venezuela because of what happened to Chevron and Mexico, right? So this, whatever it is, 150,000 or something like that in April is not exactly going to do anything substantial to the market. I think in terms of sentiment, it weighs, but I think there's a lot of other stuff that's weighing a lot more than 150,000 barrels. So I think markets are more wary about what Trump's going to do next. Yes, sanctions, no, not sanctions. Yes, tariffs, no tariffs. I'm going to make a deal with Russia. Now I'm going to put actually sanctions on Russia. All this kind of stuff. So I think that kind of yes, no kind of approach is starting, I think, to stop a lot of people out of positions, and not just on oil, but also on stuff like, S&P and all this kind of stuff. And I think that if they aren't very careful, they're going to break something. So at some point, people will just say, I don't want to play anymore, sell. And I think basically you saw a lot of that last week, where basically the US was down, but Europe was up, and I think basically people are getting out of the US because of this quote unquote uncertainty. And I think they went into Europe, and then when they saw what Europe was doing vis-a-vis Ukraine, that we're in for the long haul, we're going to finance everything and do everything. Well, they're like, oh God, they're crazy on this side as well, and they sold that as well. So it's going to be very interesting to see. But again, I don't think OPEC Plus adding 150,000 barrels is going to make a material difference. I think the market mood is bearish, sentiment is bearish, and unless this a game of chicken basically is not a game in which basically people want to take risk, right? Unless there's something wrong with them, but measured risk doesn't go well with a game of like chicken or Russian roulette. It just doesn't work. So
Well,
people will opt not to play.
let's welcome Sarah Akbar, Chairperson and CEO of Oilserve Kuwait and Non-Executive Director of Petrofac. Sarah, good morning. And similar question to you, the idea that OPEC Plus, I mean, it's kind of everybody's trying to, amongst the confusion that just articulated by Omar, is identify what are people's North Star, like what's Donald Trump's North Star? Is it the stock market index? If it goes up, he's going to tariff everybody. If it goes down, he's going to stop tariffing. What's OPEC Plus's North Star in this particular window? Would you see that OPEC Plus, there is a call on more oil from OPEC Plus, or are they making a political decision, geopolitical decision to proceed with these increases? Your thought on the decision and the market reaction so far?
Well, good morning, Sean. I'm sorry I was a little bit late, but this
No
is
problem.
Ramadan,
It is Ramadan Kareem to you.
and technology doesn't help in Ramadan too. So, anyhow, so the North Star. Well, you see, the one thing I read a few days ago, which says, "Welcome to the world of disorder," and this is, before we were trying to create the new world order. Now we are trying to create a new world disorder. And in this disorder, actually, no one come across anything like we are seeing. There's no historical kind of reference that we can use to say, okay, this is how we are going to manage this or manage that. It's a complete chaos. And in chaos, people try to mitigate to the maximum their risks. And that's exactly what OPEC Plus is doing. Now, they have been withholding substantial quantities of oil to keep this market stable. because the whole point here to create the stability in the energy market. And at this point in juncture, I think the direction is to add some production, keep the levels of pricing. And I think the price is the North Star for OPEC now, because they would like to see a stable price around the numbers that we are seeing, around the 70 kind of dollar mark. And for that, adding, satisfying some of the people within OPEC are very eager to add production. For example, I saw the piece where Nigeria is adding production and it's out of OPEC, so they are exceeding their quotas. And when people start, and Iraq was doing this before, I think there is a tendency not to stick to the quota when you see this market moving in this direction, and you have to add production because you see the price going down and you have to compensate. Now, in this world, it's better for OPEC to continue sticking together and manage it rather than stay and not do anything and keep that production out. So they will satisfy a few of the members, but I think the whole objective here is, again, to keep the market stable so that investments, everything goes back into the upstream and the midstream and the downstream so that they stabilize the market. So I think all these attempts is to try to manage and stabilize the pricing. But again, this is not a secret. Trump has been pushing to bring the prices down, and I think probably this will actually lead to an additional oil into the market at this point in time will lead into that direction. So, but
Well,
what
we
is the
certainly
bottom?
see that at least, when you start saying it's okay to raise supply, that might also apply to those beyond OPEC plus, or at least the 8 countries that are part of this. Mark Oswald, Chief Economist and Global Strategist at ADM Investor Services International. Mark, what is, from the point of view of this oil price reaction to OPEC plus decision last week, the price did correct downwards. It did react to the news and then seemed to hold. Its sort of decline stopped, and we had some, in the same window of time, some announcements out of China to really sort of get serious about stimulus. So I'm just wondering, from your perspective, Mark, what did anything stop the rock falling through the water, or is this a pause? Your thoughts on the decision by OPEC plus, the China demand side, is that still some kind of prop to keep us at 70 Brent?
Certainly the China stimulus announcements, though there's no real details yet again, I think acted as a brake on that fall. I think the other aspect of it, to a certain extent, I think this is what OPEC is gambling on. If Trump basically wants to drive the price of oil down, then that increase that we've seen, steady increase we've seen in the US in production, it's been the most important part of the increased supply that we've got in non-OPEC, is probably not going to happen. I mean, you can say drill, baby, drill till the cows come home. Your Chevrons and your Exxon Mobils are going to be saying, well, can I make any money out of new production? And they're probably going to be looking at it and saying, we're okay at 65 these days, but as for new projects, no. So I think there is a combination of factors here. I think there's probably some hope also that with Europe looking for large-scale defense spending and basically doing something to enliven its rather moribund economy, that there might be some improvement there. But these are, I'd have to say, all very large ifs. Let's see what Europe does. In the US, we're still very much grappling with, we're just in total disorder, as Sarah said. That's the very simple point. So I think where markets are going to probably look in the very first instance is once we start getting some more concrete data about the impact of Trump on the US economy, which probably, if we want to judge it properly, won't be for another month to 6 weeks. That will be the decider. If the economy does slow as much as some surveys are suggesting, then probably that is a substantial downside risk to the US economy. On China's stimulus, again, I want to see some details because we've seen so many stimulus programs in the last 3 years. We had the inflation data at the weekend. It was distorted, but nevertheless, I think fundamentally what it says is the demand picture isn't picking up. Whether it's as bad as that inflation data suggests is a little bit moot, but it's not picking up. So let's see some concrete actions, and we really need to be focused very much on activity data around the world to give us a North Star for the oil market.
Omar, the old saying in trading, sell in May and stay away till October or whatever it is. Is this a year to say sell in March and stay away? I mean, is this a moment to be on the sidelines, or are we seeing any kind of trend in that regard for the market, that the liquidity is low because people are kind of whoa?
No, I mean, yes, markets are unstable, but there are certain things that first of all, the dollar index is going lower, right? So the dollar's weakening, everything else is strengthening. The idea that the US, Europe, and Ukraine can't defeat Russia, so just Europe and Ukraine are going to be able to do it is ludicrous. The idea that Europe is going to spend 800 billion euros that they don't have to do anything is ludicrous. So it's not going to happen. So basically, and the economies in Europe are not doing too well at all. And you can see that in looking at their 10-year yields basically going higher, while at the same time the ECB is saying, we're going to cut rates, right? So basically people are demanding more money to buy European debt. If you look at US equities, the US economy is strong, but the US economy currently is buffeted. So basically dips are buys. But what you risk is the fact that you get so much buffeting and so much unknown that people throw in the towel. I don't think we're there yet, but I think Trump has to be really careful in how much he does these statements and says look left, look right, look left, and the markets get whiplashed. So having said all that, I think
like just taking the whiplash piece on the big headline kind of tariff policy of the first month of the presidency was tariffing Mexico and Canada. The new prime minister in Canada this morning, by the way, the former central bank governor of the UK and Canada, Mark Carney. But the flip-flopping on the tariffs on Canada, they're going to be 25%, well, actually we'll pause, or actually they'll be low. Is that the boy crying wolf now? I mean, how does that land on the markets in the sense, from a trading point of view, that you just can't build any house on what he's saying? Or what's your thoughts on that kind of significant
so
flip-flop?
as soon as if he says tariffs, people basically sell, because tariffs mean trade war, right? Tariff, sell. No tariff, shit, go back up again. Tariff, sell. No tariff, tariff today, and then later, well, maybe we'll delay it. Let's delay it for a month, but let's then bring it back earlier than I said we would. So it's this kind of instability of not knowing what somebody can say and therefore have a sudden effect on the market, which makes it very difficult for you to have confidence in your view, right? So you have a view that oil is heading lower. We have a view, I have a view, oil is heading lower. But tomorrow, Trump could wake up and say, I'm going to hit Iran, in which case everything goes back up again, right? Same thing with the US, with the S&P. Trump is saying what he said so far. If he now says, right, tariffs are off the table, we're just going to negotiate and see behind closed doors, market will absolutely roof. If he says, I'm going to impose 100% tariffs on China, and the tariffs on Mexico and Canada are going to continue for at least 6 months, and I'm going to put 25% on the EU, the markets will dump. So this kind of walking a fine line between saying, okay, everybody's really happy, everybody's really sad, everybody's really happy, everybody's really sad. At some point, that kind of market psychology breaks. So that's what we're kind of heading into.
He does seem
So
to have a pretty, there seems to be a sensitivity each time the S&P takes a hit, and he backs away. Although I was reading in different analysis of that over the weekend that there are actors within his team that seem to be happy with that. Sarah, let's look at that point Omar mentioned. I know it was just a throwaway comment on his part. Indeed, there is greater tensions with Iran and US. The soundings initially seem rather positive just on that one piece, that we see Iran announcing today or over the weekend that they're willing to talk about their nuclear program. The Russians apparently have been engaged by the Americans to sort of try and be the go-between the two. Your thoughts on that as a sort of a regional issue where we sit, where it intersects with OPEC plus policy? You're on mute, Sarah. Sorry, you're on mute. You're on mute.
So you saw the piece of news that actually Mr. Zelensky is meeting Rubio in Riyadh, I think, this week. So
yes.
So there are two fronts that will impact the energy business, two trends. One is the peace process for Ukraine, which means Russia back into the game. And when it means Russia back into the game, you have the gas back to Europe, bigger quantities than, maybe going back to some kind of arrangement from before. And this might be a big element in all the discussions that will take place between even the US and Russia and Ukraine. So that aspect will impact the markets dramatically, bringing back Russia into the game. Both gas or oil will be a big game changer. And the second part is whatever happening in our region. There are two parts to what's happening. One is what's happening in Syria today and the kind of changes from the Syrian front, Israeli front, the Arab, there was a process, if you remember, between between Saudi and Israel trying to come to some kinds of arrangements which have been completely fallen apart because of what happened on in October 7th. So what happens in Syria has big impact, because if, as a result of what's happening there, you have divisions or separation of parts of Syria or creating smaller entities, will impact definitely directionally what happens in Iraq and what happens in Iran and what happens in the region. So that's something which I think everyone is watching very closely and will have big impact. Now, the second impact is this discussion between Iran, US through Russia. And again, before Iranians, when the letter was sent to Khamenei, there was a certain response from Khamenei, we want to discuss this and that. But I think eventually, not the US, not Iran, none of them want to go into any kind of serious war or conflict like that. So they will come to sign some kind of arrangement, which means probably if they do, then, this is the best case scenario. So that the best case scenario is there is no war, and Iran and the US come to some kind of an agreement. They have some kind of, sign some kind of agreement where it stabilizes the region. And if you saw yesterday,
and you would think the region would be much more receptive to that outcome rather than squeezing Iran into a little box again and getting its oil off the market. And
definitely, everyone in the region sees that a big stability factor. You see, yesterday the Prime Minister of Qatar was talking about the huge risk of the nuclear plant in Iran, and if there is a war, everybody will lose here. So the best interest of all groups is to have some kind of arrangement between Iran and the US where we make sure that none of the nuclear plants, or at least the one on the Gulf, is really not impacted by any kind of war. And that's existential threat for everyone. So that's why I think the direction here is for all the GCC to support the discussions with Iran in order
And
to.
you would imagine that would appear, at least on the surface of things, that Saudi Arabia has some influence on Trump, or has a seat at Trump's table at least, to convey these messages about the region's desire is different than it was 5 years ago. We want to bring Iran into the fold. We don't want to keep them isolated in a box. That feels like the dominant sentiment of what's different between now and the last time Trump was around. Mark, I wanted to bring in your voice on the part of the European aspect of this. Big week last week in Europe. I don't know if one can use the word big too many times here, but it was a massive and reported as such. Obviously, I'm not telling you anything you don't know, but your comments seemed a little bit skeptical, though, in terms of Europe really grasping the nettle of this moment of change. They've announced, particularly on the German side, essentially a massive reform departure in terms of debt, borrowing, and spending. But you're not convinced.
I'm not convinced. I mean, there's three reasons. The first one is, let's go back to the start of the Russian invasion of Ukraine. Olaf Scholz came out with a lot of big statements, which ironically sound very similar to the current ones, about German defense spending, about standing behind Ukraine. So this new piece doesn't actually sound as new to me as people say. 6 months later, Europe was back, or rather the EU was back bickering with each other, reverting to type. Yes, there is one fundamental change. That was under the Biden regime. This is now under the Trump regime. The Trump regime clearly has said it's basically sending a clear message to Europe. Look, you're not one of our priorities. You sort this out. You carry the burden of the cost of this, and Europe is responding. So let's see how that does. But in Germany, if you look at the biggest problem that there is, it's the whole planning process. It's a legacy process from the Second World War, from the Marshall Plan, where everything is basically a planning committee to have a planning committee to have another planning committee which makes a decision. And that is enormously wasteful in money terms. The Federal Audit Office estimates that Germany has wasted 215 billion euros since Fukushima on planning related to the energy transition. Just think what that 250 billion could be used for in helping to support Ukraine. But let's see what they do. But what I'm saying is, as Omar was basically implying with Trump, we need to see actions. Are they going to be, what actions are being taken?
So essentially, kind of like on both sides of the Atlantic, we're bombarded with headlines, but we've got to sort of way through that and look at where the rubber is meeting the road, because there's so much noise. It's difficult to really grasp where the impact is actually happening. Let's go to the survey question, which is sort of tackling some of the themes we've discussed this morning. My thesis this Monday morning is that Brent holding at $70 1 week later is a win for OPEC Plus decision to raise supply from April 1st. Agree or disagree? That is the idea that we saw oil prices dropping. They've sort of coutured the wound, is that the saying? But they've essentially, it seems at least, is this a pause in the rock through the water, or is this sort of a market looking for a new floor? Omar, last week we chatted on this topic, not so deep on the particular OPEC Plus part, but ultimately on the technicals. You said if WTI got to 68 and change and Brent, or up to 75 on the high side, where are we at now with this correction over the last week in terms of those trigger points for the market going forward?
So I think the market's heading lower. If we manage to, where's my Brent TI? So if we manage to get below markets trading about 66.50, let's call it. So if the market
WTI.
gets WTI, sorry, 60.50, let's say. If we manage to get another like $3 below that 63 something, then you can forget about oil for the next year easily. Because we're coming to support that's been going on for at least 2-3 years plus since before the war. So you break that kind of 63.50, 64 level on WTI, and things will get pretty ugly. Why? Not because people will say, "Oh, you broke that level, everybody sell." No, it's because basically people invest in oil long term. They look at charts. They say, oil fundamentally is very cheap. Let's buy, these levels, blah blah blah. But once you break those kinds of levels, people who are long will start basically to close positions, no matter what. Doesn't matter if they're right or wrong or whatever it is, but their risk now becomes so large that they have to close at any, they basically just have to shut their positions. And finally, I'd like to say something on the war or
Please.
prospective war here in the Gulf, right? So the problem, first of all, the Russians and the Chinese announced naval exercises with Iran now, right? Which I think is telling you something. The second thing is, if there is any kind of war, the region in the Gulf will be, I think, decimated, like militarily so. And the other thing is that if Iran does something, which I'm certain that they will, close the Straits of Hormuz, all of that stuff, the Western economy will absolutely implode. I mean, implode like, not even like the 1930s. Like, I don't know what would happen. It would be a totally complete disaster. So you've got this on one side, that's the risk. And what are you looking for? Are you looking basically for whatever to help Israel, or I don't know what the plus is on the other side. So again, I don't view that as a real risk. Is it like a nutcase scenario? Yes, but you can't consider every nutcase scenario. So I don't think there is a risk. There might be bluster, there might be talk, there might be whatever. But if there is such a risk, everything goes to hell. And not
Helen,
just the region, the
Yeah.
entire global economy. So I don't think it's going to happen.
It's not a bet, although we do have some fairly unprecedented individuals, let's say, in powerful positions both in Tel Aviv and Washington. Sarah, I wanted to take the opportunity to ask you about what's going on in Kuwait. Kuwait is back in the news, even in the FT over the weekend for taking people's passports away, essentially removing citizenship from those who had already been blessed to receive it. Generally, that's some gateway into what's changed in Kuwait. Tell us a little bit about what's going on. Is it more to come? What's it look like from your perspective?
Well, we hear from government, yes, there is more to come on this correction on citizenship, because they, in their view, what happened, 1990, we were about 600,000 people. Now we are 1.5. So the growth, it's not a natural growth. Something happened there. And, we are not privy to what kind of analysis is being done. But according to this analysis, there are many people who got this citizenship through illegal mechanisms or whatever way, and they wanted to correct the system. According to what the Emir said, he said the whole system was hijacked by people who were not actually even Kuwaitis, and that's part of this correction in citizenship. But the best thing that's happening in Kuwait these days, I'm sure you've seen the news, is this offshore exploration, which is adding huge quantities of oil into the reserves. So we have 2 fields already discovered, and there are like 3-4 more that they are targeting. So we will have a very vibrant offshore, which we've never had in the past. Now, and I think, to develop this will take some time, but I think that's the best part of the news that we have. Other than, many people are upset by revoking their citizenships, and some of them have some legitimate arguments, and I think.
Well, it seemed, the reporting of the FT this weekend about this story was indicating that as everybody in Kuwait's affected by this. It's become so significant and such a scale that every household has somebody in it that has been impacted, a wife of, or whatever it might be. Obviously, Kuwait trying to get back on some pathway to the 21st century, and maybe this is one of the ways to do it. We will see. It was once a the leader of the region in economic development and growth, and has since sort of become a little bit left behind by what particularly has been happening in the UAE and now in Saudi. Mark, last word to you. I wanted to get your thoughts on, has the last few days changed the trajectory on the outlook for the Fed and rates? And both in Europe and America kind of flipped over on each other. All the spending in Europe might indicate less rate cuts. What do you think the outlook for rates are now? U.S. job growth on Friday was a little bit weak. The outlook for the U.S. a little bit weaker than only a week ago. The rate outlook and its relevance.
I think a weaker dollar on the one hand is a little bit inflationary, but the Fed will probably ignore that because it doesn't really make much difference. But the Fed is looking at what's happening with the US economy. We've got the Atlanta Fed now, GDP now tracker at -2.5% for Q1. They will be looking at that. They know there's some distortions in it, but they'll be thinking maybe we need to tone down our language a little bit in terms of it. But they've got a difficult balancing act. I would say, yes, it probably means I think we could easily get 100 basis points of rate cuts this year. And we do.
Wow.
Yeah. And that's largely because I expect to have what Trump's been doing, above all in the public sector in terms of jobs, is going to have a very negative impact on employment. Just the toing and froing basically means a lot of the private sector is going to be saying, do I really want to hire now? So all the risks are stacking up for the Fed to be
well, as Omar said, I don't want to play anymore with all of this uncertainty, and that includes hiring, right?
Yes, indeed. And so, that basically does turn the tables. Europe basically looking at inflation being a bit, they're looking at two inflationary impacts. Can they deal with this vast increase in defense spending and what it implies in terms of demand from the public sector? Probably yes, because, the European economies aren't really big outside of Spain. Most of them are in a 0 to 0.2% per quarter. So, but it probably does underpin the Eurozone in terms of it doesn't slip into recession. So the ECB probably thinking, 2.25%, maybe 2%. We're not going to go below that. So we have flipped the outlook in terms of the rate differentials, and you've seen it in the 10-year rate differential between Germany and the US. We went from 215 at the beginning of February. We're now 150 or thereabouts. Round about the 150 mark. That is a sea change, and we've not seen one of those sea change since German reunification since 1990.
Well, you wonder, as we've been talking through the half hour, and you finish with that data point, is that a red light flashing, or is that a bright, happy new dawn? I mean, it's one of those things that's like, wow, is that kind of move is so dramatic that it sort of shakes up every other reference that has to readjust to price that in. So it does feel like there's a lot of big moves. And as Omar said, I think the quote of the day, they could break something, which is a fairly gentle way of saying, hold on to your seats. Brent, generally this room is agreeing 3-1 that OPEC Plus will be happy at 70. It's a good outcome from a big decision. Let's see where that goes this week. But thank you, everybody. Thank you so much, Sarah Akbar in Kuwait, Omar Najia in Dubai, and Mark Oswald in London. Great to have you with us. And for everybody who's participating, Ramadan Kareem. We're in the middle of this wonderful blessing month. And for those who are celebrating it, have a very blessed Ramadan. Thanks, everybody.